Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Ally put out a study last week that showed which generation is selling their investments right now. And I'm gonna just put the graph here. And my people, my millennials, are at the top by a mile. 49% of millennials reported in the study that they have sold some or all of their investments this year or over the past year. If you go by each generation, you've got Gen X at 21%, Gen Z at 17%, and then you got boomers down there at 13%. So in this video, we need to talk about what is going on in the market, why it may not make sense to sell, but most importantly, what can you learn from the situation? Because I really want to focus on the last part, like what can you learn from the situation? So let's just break this down, okay? The stock market is down double digits so far this year. We'll see what happens between now and the end of the year. I don't expect it to be positive, but I can tell you this: from 2000 to 2021, the stock market has only been negative 5 times. Go back, look at the S&P 500 from year to year. It's only been negative 5 times. That is close to about 80% of the time the stock market is positive. It doesn't make you 80% every year, but 80% of the time the stock market has been positive. So that means that, you know, if history is to repeat itself, and sometimes it often rhymes, that investing for the long term is one of the best things you can do. We always say buy low, sell high. This is one of those low periods, and you should probably act accordingly. However, this is the part that I want to double click on or zoom in on right now. It depends on what you invest in, and it's why I do so many of these videos Monday through Friday, because there's a lot of information that you can add to your memory bank, add to your experience, and then start to make better investing decisions. And here's why. So I posted on Friday like I always do, and I go through and I dollar cost average, okay? Normal procedure here. Someone had commented and said, I hope this investment works out for you. I am selling everything and going to cash, and I'm never investing in the stock market again. Which I didn't respond, but I'm like, that, you know, I was hurt because I understand the power of the stock market and what it can do for you over the long term, not overnight. We talk about long-term investing here. So that like really bothered me. So I said, you know, didn't say anything, didn't respond, but I did go and click that person's portfolio to see what they were investing in. And that's where I saw the problem. So there were 2 stocks that really stood out. I didn't even get it to the rest of the portfolio. I'm not going to do a whole grade because I didn't get into that. So here's a part of their portfolio. So Upstart is the first one that I want to point out. Upstart is down 93% in the last year. Upstart is a fintech company. What have we known about fintech for more than a year? We know that fintech has been one of the worst categories, and we've talked about a lot of these tech stocks that had to borrow money. Interest rates are going up. This is why we talk about interest rates so often. Like, go to my profile page on YouTube and type out how many times we talked about interest rates. When I sold out of PayPal and Block last December, we had talked about, I think it started to fall off around October-ish of 2021. And we said, look, you know, I like the company. They got some good things going for it, but for whatever reason, at that point in time, fintech just was not doing well. However, this person may not have done the very bare minimum when it comes to investing. Another one they have is, I'll pull this up here too, it was Ziva PBC. Now they create 0 calorie, 0 sugar natural sweeteners. The stock right now is less than $5. That is a penny stock. We've talked about those before, and they tend to be volatile, and I would say more than 90% of the time they lose money over the long term. And if I look here over the last year for this company, it's down 67%. So if you are investing in that's just 2 of the holdings that just really stood out to me. If you invest in something that's down 93%, you invest in something that's down close to 70%, you are going to feel a certain type of way. However, especially with these 2 companies, this was easily avoidable. Okay, now you can't avoid every single risk in the stock market. That is not a thing. You're going to invest in some things from time to time. Either the market just turned against you, or it just wasn't the right time in terms of like what the economy is doing. That's going to happen. But with experience, you can ride it out, you can learn and continue investing. But this is not 2020 anymore, where you can just throw a dart and everything works. Right, the stock market is about understanding what you are investing in. It's why inside the members only, I talk a lot about using certain websites to help you figure out what to invest in, showing you investing statements, the balance sheet, the income statement, show you what to look for to see if something makes sense or not. It's why I post so much content Monday through Friday to help you stay up to date, to collect more information and take advantage of the compounding interest of information. So think about it. Like, when we were talking about banking at the end of 2021, interest rates were going up. We expected that. We didn't expect inflation to go up the way it has. But interest rates go up, I said healthcare made sense, and I said banking made sense. Once we hit about March or so, and we started to see inflation not go the way we expected, and we started to see the Russia-Ukraine situation evolve, we said, look, I don't know if it's going to be banking, but healthcare is still good. Eli Lilly is still good. United Healthcare is still good. And we start to make that pivot towards insurance. You've got to be able to learn from these things, right? And adjust to these things. Upstart was incredible, I think, in 2020 to 2021. And it hasn't been since. It's been more than a year that company has really taken a fall off a cliff, right? 93%, that's not normal. So my thing is, and the most hurtful thing that I took out of that was the fact they said they weren't going to invest anymore. That's the part that bothered me. Because again, we know 80% of the time, not this year, but 80% of the time the market is up. But instead of saying, I'm going to learn from this and improve and see what I need to tweak and like go seek out different resources, whether it's this channel or someone else's book or someone else's TV show, whatever that thing is going to be, you just quit and gave up. And the stock market, I can't really speak for crypto, but the stock market is one of the best generators of wealth that we have in the US, because real estate is good, business ownership is good, but it can cost you how many thousands of dollars does it cost to get a down payment on a house or rental property, right? You can start with an affiliate link for Public or Robinhood or whatever app you want to use and get $5 to invest for free, right? And you can start investing $10, $15, $20, $200 and like slowly build that capital up to invest and grow your money. That is doable. And the other part is, there are opportunities even in this market that are still green. Is it as many as what we're used to or what many are used to? No, it's not. But again, the healthcare companies are out there. Hershey is still out there. Enphase that we had talked about and did an entire breakdown inside the members only. That stock is out there if you're looking to those things. T-Mobile is still out there. Like, there are a lot of companies that just take a little bit of time to find. And by a little bit, I mean these videos are what, maximum 15 minutes? And there are tons of ideas. And I put out 250 videos every single year. So the information is out there. But just remember, keep your eye on the long term. That's number one. Okay, keep your eye on the long term. 2022 is not the rest of eternity. Okay, things will change, the market will improve at some point in time. I don't know what date that is. I wish I did, but I don't. But experience has showed us, history has shown us that, again, 8 times out of 10, the market tends to be positive. The other side of this is, remember, understand what you're investing in and make sure that you have that investing context rather. You have to know, this is what's happening in the market. I need to match that up with an investment that does well in that particular situation. We are dealing with high inflation. What does well in high inflation? Sometimes it's defensive stocks. Sometimes it's dividend stocks. Start to add those to your portfolio. What you don't want to do is get a tech stock that does not have profit, that does not have or isn't doing well and is borrowing money. That is the worst space for you to be in. So that ain't the one, right? But if you don't know that, if you're not trying to learn, if you're just kind of picking things out of the blue, then that's how you run into these situations, and that's how you get burned and just quit the stock market altogether, even though it is one of the best places to be. So my message to you is, I know it's stressful. I know it is not fun, especially if you are new and even if you've been investing in the last 3 or 4 years, this is not fun. Nobody is having that much fun right now. I would prefer to look at my portfolio and it's green all the time, but it's not. The way this gets fun is by holding, by dollar cost averaging, and then looking back a year from now, 2 years from now, 3 years from now, and you look back and say, yeah, I'm glad I had that. Everybody says they wish they had owned Google when they went public. I wish I would have owned X, Y, and Z 20 years ago. You can't get to that 20 years ago point unless you are doing something right now, unless you are still investing at a time like this. All right. So if you want to learn more about how to become a better investor and learn what to look for and how to look for these critical points of information, feel free to join the members only. One of the reasons why I bring that up so much, other than the fact that it's fun, is we have some really cool tidbits on how you can find information that can make you a better investor. So for example, when I brought up Starbucks yesterday, I said there were 2 directors that bought into Starbucks. Makes a lot of sense, right? But also when Howard Schultz bought, I think it was on May 12th, and put out that content and showed people exactly where to find it inside the members only, that stock by itself is up more than 20%. The opportunities are out there. They are out there. They're not as easy to find as they used to be, but using the tools that we talk about, the members only can definitely help you. So make sure that you check it out. Make sure that you hold for the long term. And most importantly, make sure you understand what exactly you are investing in. All right, the kids are home, the garage door is opening, and I just feel like it's just appropriate because timing just happens that way. All right, so I'm going to get this video edited and send it out to you guys. If you have any questions about the stock market, let me know. I feel like I do these like come to Jesus talks every month, especially in a year like this, which is fine, but like we need to have that context and have this type of conversation. All right, that's it for me. I'll talk to you later.